All right, so I'll go straight into it, to what happened yesterday, and then why we are obviously on the wrong bias. Okay, so this is the 4-hour structure, right? This is the 4-hour high we are concerned about, and the 4-hour low. Okay, because this was actually a 4-hour break of structure that led to all of this extra push up. Okay, and so let's bring out whatever tool we use to try to fix our midlines or 50%. Okay, now as of yesterday, the high we were considering as a protected high because of structure, okay, was this high, right? And then we were expecting price to react off that high because of structure, the intraday structure instead of that high. And then it tallied with some other structure in this range, forgetting the fact that the algo, okay, the system that controls price will never take a major move outside of anywhere that is not premium or discount. Okay, so we're expecting this to sponsor a move that will rally all the way back down. Okay, from this point to this point, approximately, let's say 200 pips thereabouts. We're expecting a 200 pips downward from an area that is not even premium area. It's not premium pricing. Okay, they want to sell cheap. They either want to sell expensive and buy cheap. That's how it works. Okay, so waiting for them to try to enforce sales from an area that is not even in a premium area was our wrong, because we saw a structure. So you get me right? So it means that we were not even supposed to be looking for sales from that point until we were back into our premium region. Now we are in premium. Anywhere from premium can now begin to enforce sales. Okay, and now this is a valid area. This is a decisive area. Okay, I'll call this a decisive demand. And then I'll call this area here my extreme demand. Supply rather. So my decisive supply and then my extreme or origin supply. So any of these areas will now be able to enforce the sales that we are looking for if market is not willing to give us an automatic change of trend. Okay, because they have just entered into premium pricing. Okay, so that being said, let's take out this and then view the internal story that was on the 1 minute time frame. Okay, so I saw you guys talking about flip zones and how you would have engaged the flip zones and all of those things, right? This looks nice for a reaction, but then I'm not interested in this yet until it violates the zone. I don't want to take any losses this morning, so I'll need a clear confirmation to come in. So let's just get on here. So yesterday, all right, yesterday this was the high that opened the day, right? And then price continued downward, right? And then some of you had this high marked out as your main inducement level. And if you remember, I mentioned that price may come up at a later date to want to take out this high because they are equal highs. Yes, they're possible inducements. And then we have a nice grab on liquidity. So this was the last point before this. But then even inside of that, there was a story. I don't know if you remember me saying that yesterday. There was a story that supported what price did because this was also a grab on liquidity. Right? And this was also a shift in structure that made this point the last point of inducement. Okay, so this is it. That now sponsored or made the move begin from this point. So this was also fair pricing because of that story that happened internally here for market makers to leverage on. Sorry. Okay, so this was already a very fair story itself to cause a move. Okay, but then because we were not yet in premium, and then the journey we were in was a journey to premium pricing. The journey we were in is a journey to premium pricing. Because of this move, we disregarded the original journey we were supposed to be in, and then we were not concerned with this structure and this structure. Okay, which was wrong. So we were on the wrong bias yesterday But then if you understand your inducement level properly, even when you're on the wrong bias, at least you will make some money. Okay, so price continued yesterday and rallied, right? I took some small moves instead of this place before I got stopped out at break even, then the major move happened. So that was that. So this was now our grab on liquidity and a shift in structure, right? So now if you look at this here, this guy grabbed liquidity from this week as an inducement week, right? So it means that this was a protected high that was not supposed to be cleared. Hence, this was the block. If price would respect the block, this has to be the block that would enforce the movement of price. Okay, because it has the characteristics for a clear structure just like this. So this one grab liquidity and drop. The same way this one grab liquidity and drop and should be protected. Okay, but price came towards the area, gave us some sort of reaction after taking liquidity from this, right? Dropped and then went aggressively to totally rinse the area. Now, some of you would have been marking these highs, and then that is why you would not see this. Even if you mark the highs were wicked. Okay, that wick is a violation on the zone already. That's absorption. Okay, so this is actually the block that would have been the other block if you are trading other block. So this would have been the other block, not the whole of this. This is where the significance is. And then price aggressively reached that point. Okay, so some of you are now able to capitalize the sales back from the point you had marked in the morning. I know a few of you had marked this point in the morning. I saw your work. I think Platinum did that, Jay as well, and was it Felix? Some other people marked this high. So it now came now to respect your inducement level and then dropped. Okay, if you were on the 30 seconds time frame, you should have seen a way to come in if you were trading a much more lower time frame, because this is already a grab on liquidity, right? This is a shift in structure, right? And this becomes your internal inducement week to be cleared, right? So this would have been your entry to drive this thing to the downside. So yes, there was a confirmation entry here if you had eyes to see the 1 minute already. Lately, I've been feeling very reluctant to subscribe my TradingView back because I think I almost see all the moves as they should happen on the 30 seconds or lower. So this was a nice sell-off down to this point, and then targeting this inducement level at 7R. Okay, so what did price do with this area? This was the guy that sponsored the failure. Okay, this is the field block. This is the field supply. This is the last point of demand that sponsored the failure. Okay, this is my inducement week instead of the area. I just need price to tap into it and then move. Was there a confirmation here? Yes, there was also a confirmation here on the 30 seconds or 15 seconds as the case may be. Okay, because this is my, I told you when it comes to indecision candles, the volume are in the body, right? The volume is in the body. So if price should respect this and drop, it should respect the body. A violation above the body is already a shift for me. Okay, and then where's my inducement week? I expect price to clear. I can use this, or I can use this. Any one of them I use, I will have stop loss below the previous week that was available at this. Okay, but then because I'm trying to trade the full zone, I just mark out the full zone. So this was already a confirmation entry. Grab on liquidity, a break of structure because it has violated this body, right? Even if I take it to the week, it has already violated the week with a very tiny week, some pips already, okay? And then came back to induce this. Now, let's say you did not see all of that story and then you just needed to take this trade. It's simple, okay? You're risking just 4.2 pips. You can choose to risk 0.10% or just risk $10 from your account or $20. At least make some penny or some out of this. That is if you had seen the move. Okay, that is how to deal with moves that you are not sure of because you did not get a confirmation. But then the story that was preceding was a clear story. You just go in on low risk, at least learn from it or make from it. Now, what was the confirmation for these sales? For those who did not see clear confirmations here to enter. Okay, this is also an inducible high. Okay, so let's take out all of this one that had happened here, the internal magic. Let's take out the internal magic, okay? And then we have candlestick structure and then we have price action structure. Those of you who watched the videos of structure in the beginning, I talked about all of those things. Okay, so we have candlestick structure and price action structure. This was the last inducible high, or I can even use this before the origin, and this is the break of structure. In Asia, what did price do? Price came back to that area only to what? Grab liquidity from that high, right? And then delivered back to this flip zone. Why is this a flip zone? Why is this a flip zone? This is a grab on liquidity, right? Forgive the dog, forgive the dog. This is a grab on liquidity, right? And internally, this is a shift of structure, right? That sponsored move further to this point. So it was expected that for some reason, price will come back into this range after shifting structure. Price will come back into this range to give us some certain level of sell-off. True or false? Am I talking to myself? True or false? Okay, true, because we have a nice grab on liquidity, and then this is a nice reaction back to this range. Okay, so every other person we're expecting, this is an imbalance to be filled. So price will just come here, mitigate, and then give us a move. Candlestick structure referred to this. Okay, nice. I will show you that on the other one too. Candlestick structure already referred to this as a flip zone. Okay, and then back and forth and moved, right? And then did what it could do to rally up to these points. That's candlestick structure. But then the price action structure is working with the full zone. The price action structure is not seeing what the candle did. It is seeing this move to this move to this move, right? So this is the high. This is the swing high, swing low. So price has to come back into the area, not candle to candle, zone to zone. So price needs to revisit this zone. Okay, so go back and watch the video on candlestick structure and actual price action structure. So what did price do? It came back to the flip zone, the actual flip zone that sponsored the move. Okay, and then sold off in Asia. Okay, the same thing happened with this point of inducement, candlestick structure. Candlestick structure. Okay, this got violated at this point. This is the main origin. Okay, candlestick structure only came back to grab liquidity, right? Let's see, we got a shift of structure here, and then internal inducement levels. Internal inducement levels. Okay, so that's candlestick structure. But then the actual price action structure still came back to the zone. Still came back to the zone to enforce her move. Now, some people who would have been trading this with respect to breaker block, if you trade breaker blocks, would have had all of this backed out. That is still candlestick structure. Okay, that is why I hardly use breaker blocks. I like to use origin blocks. And then came back into the area to do its thing and then played off nicely and then moved. Okay, so it means that if we had eyes on the screen and we had stipulated systems we were willing to respect and all throughout the night, and so it's possible to almost take everything on the chart. Sometimes you get bonds, okay, but when you get bonds, you're only risking maximum a percentage of your account, so it's still good risk if you're trading a personal account. Okay, so this was the flip zone that happened this morning, right? This was a grab on liquidity of this high in Asia, shifted structure, right? And then came back to this point. So it means that we would have expected price to come into this region. Okay, everything built in here was to become inducements, right? So 6 a.m. mitigation, and this was, what was this? This was 7 a.m. Yeah, so this was Frankfurt Open. Frankfurt Open, price got violated, right? Cleared the whole area, then came back again in Frankfurt Open to do the mitigation to move. Still candlestick structure, still candlestick flips, okay? So it's possible that in the nearest future, we could still get some level of a reaction from this Asia midline because of what has happened here. But then I would not expect any of these to hold because of equal low as a liquidity pool, okay? I want to believe you understood all of those jargons I was expressing.
Yes, sir.
All right, thank you very much. Any questions?
Can you recap on this last previous video you just talked about?
This one?
You said this one, you said has equal use and very minor.
These are equal lows now. There's nothing to. Equal lows are liquidity pools.
Yes,
okay, so if price comes back here to respect this zone, we'll just be creating more lows that will become drawn liquidity. Now, price can create equal lows for just the sole purpose of engineering liquidity. Okay, and then we have seemingly equal lows. Okay, because if you look at this properly, these are seemingly equal lows because we respected same levels. Seemingly equal lows because we respected same levels. Why did price leave them and did not read them? Because the idea is to engineer liquidity that will be wiped throughout when they start coming down. Okay, so they have people who are already waiting to buy from here because of double bottoms. They still have people who are waiting to also buy from here because of double bottoms. They have people who are still waiting to buy from here again because of double bottoms. They have people who are still waiting to buy from this area again because of triple bottoms or four bottoms or quadruple, what the case may be. Okay, so all of these things were just means of engineering liquidity that will be cleared on the long run. Okay, so you don't want to be in the liquidity. You don't want to be the liquidity. Okay, now don't forget the reason why all of these were ignored is because price was only trying to make a rally to the upside. Okay, so when price is trying to make a rally to the upside, it is also engineering liquidity that will be used in the future to trap dump money traders. Any other question? Yeah.
I know I watched a video on this thing on Flip Zone. I think this morning, but can you just explain it again?
You watched a video on Flip Zone?
Your video actually, the one that you posted on the FM.
Okay, on Flip Zones. All right. This is what Flip Zone means. Flip Zone means I am seeing my buy setup, grab on liquidity, break of structure, an inducement high to be taken, and then price comes to that area and gives me some sort of reaction and then raids the area. Okay, so it means this was supposed to be my level of demand. I expected price to supply, I expected price to act from, right? As soon as this happens, it means that the supply that failed has transferred power to the demand that caused the failure. So next time price is coming back, I am expecting price to come back into this region. Okay, and now give me a move to the upside. Okay. That's simply what it means. Yeah, I think there was something I wanted to share with you guys. Can't remember. Let me check my notes. You guys just hold on. No, I had something I was supposed to share with you guys today. Give me a minute. Let me see if I have prepared that. One minute, guys, I'm coming. Okay. All right, nice. This is another way to know a weak demand and a strong demand. Okay, so I'll just go through that. So this is giving a very nice follow through internal structure. After this break, this would have been a nice area to come in from. Okay, and already I would have been break even on this trade at the moment price breaks this low. So that's that. Let me see what this would have looked like. Yes, it would have looked just like this. Just like this. And already this would have been break even. Break it, let me break even. So this would have been my break even protocol at the shift of this structure. And then part 1 to 5 would have been a nice area to take partials. Yeah, so at this moment, you would have been break even already. Okay, so what was I explaining? So
Supply and demand.
Yeah, supply and demand, right? So let's say we have price, okay, in a downtrend, right? And then we have this, and then we have this, right? This, we have this, have this, we have this, and we have this. Okay, if I have this kind of formation, let me shift my screen a bit. If I have this kind of formation, right, I'll be willing to go in a bit more aggressive, even without seeing proper confirmations. I wouldn't mind. Okay, because this shows demand strength. How? We have swept liquidity from this low, right? I told you structures are a form of liquidity. So we have swept old lows, we have swept old lows, right? But then we have also engineered liquidity in all of these highs as trendline liquidity, right? So it gives price a reason to now respect grab on liquidity, break of structure, and then I'll be willing to look out for my internal inducement level here to be taken, right? And then most cases it should respond, right? And then clear all of this. Why? Because there are some sort of engineered liquidity that can be taken. Now, do not forget, it has to be in respect to a prevailing trend. Okay, it has to be in respect to a prevailing trend. Now, what is the opposite to this that shows that a demand level is weak? Okay, let's say we have, all right, let's just tweak this so we don't stress ourselves. We have this, and we have this, and then we have this, and we have this. Now, what has happened here is still a grab on liquidity, a break of structure, right? But don't forget that price has also grabbed liquidity, swept liquidity here, as well as sweeping liquidity here. But we have successfully created this, right? And what is that? All of those are liquidity, pool of liquidity to be cleared. So price can just decide to come here and then give us this and then dump. Okay, then we'll now look out to trading this and then continuing with this. Does that make sense?
Yes, sir.
Okay, so always look out for where we have liquidity sweep and where we have build up on liquidity. Where is price sweeping liquidity? Where is price building up liquidity? Okay, it will help you understand what zones to come in aggressively or what zones to not even take at all. I hope that makes sense.
Yes, sir.
All right, guys. So the essence of this was just to visit through what happened yesterday and how we could have taken.
I have a question.
Yeah, proceed.
I have a question about the supported basis, supported demands and supported supplies.
Yeah.
When you say demands are supported, does it only apply to having another block below them, or what is the concept about?
Okay. What moves price is money. Okay, money is transferred from one candle to another candle, from one candle to another candle, and forced into a different candle, and so on and so forth, right?
Yes, sir.
So in simple terms, if we have this move, now this guy here, what zone did he react from?
Nothing.
Nothing. He's not supported. This guy came back into this region to do its thing. This came back here. So we can address this as some breaker block mitigation, right? And we can say this one came back to revisit its discounted level as the case may be. So what did this guy do? Nothing. So it's unsupported. It's not supported,
Oh.
right? The essence
Yeah.
of this is to engineer liquidity. So when price get back here, they may give you a reason why you should trade from this, okay? And then they flip you out immediately and get back to where they want to represent their story, okay? And then move. Okay, I hope that
So
makes
let's
sense.
say where we have the general trend going up. We expect price to take a level on the upside, and price comes back to take this unsupported base,
Yeah,
then give a kind of change in character.
yeah.
Is it advisable to take the trade?
What is the structure? You must understand structure. Okay, where you're trading from, is it a structural point? That's why it's important to understand premium and discount levels. Okay, so this is swing low, swing high, swing low, swing high, swing low, right? So let's calculate
Yeah.
from this point to these points. Okay, as the new swing high and swing low. So this is 50%. Okay. Now, this is the 50% range. For price to be effective, it has to slide through equilibrium at least, not rest above equilibrium. Okay, you understand that?
Yeah.
So any move
Yeah.
inside of below the 50% range is justifiable for you to work with. Or any move that has sniped the 50% range is justifiable for you to work with. But in most cases, it will only hold for a short while because price will also use that as a build on liquidity that will be cleared in a later date.
Okay.
Yeah.
Thank you, sir.
You're welcome. Any other question? Any question? No question? All right, guys. So I think we're done with that. We just have to, while you want to trade and you want to make money, the idea is to ensure that, I will always say it, you get 1% better every day. Okay, the idea is
I have a question.
Yeah, I can hear you.
So how do you know if money has been transferred from one zone to the other?
Mitigation. That's how you know. Mitigation. Okay. That's simple money transfer. Mitigation simply means transfer of money. Okay, this is mitigation, right? Everything inside of here that enforced these cells, they had transferred it into this, right? And then they had transferred this from here to this, right? And then they have transferred this from here to this, right? So everything is just money transfer. And then they have transferred this from here to this, right? Mitigation, that's how money gets transferred.
This makes sense.
Okay, so just simple money transfer, that's all what's happening. So it's not anything to, all those things are just big names. Yeah. Any other question? Any question? So from this flip, I think somebody was asking if I can use this as a confirmation, right? Who was asking that? Somebody
Me.
asked me. Yeah, you were the one that asked that, right?
Yes.
Okay, yes, we can use this for a re-entry. Okay, that can go for a re-entry.
Okay, I don't think it was this point. I don't think it was this point.
It was this.
think it's-
Yeah,
Yes.
it was. No, it was.
Yes, that's
it was.
one.
It was because this is an actual breaker structure. Okay, so when price broke this structure, we'll just be needing another area inside of this area that can further tell us what we want. Now, the concept of breaker blocks comes in here. But if you don't understand breaker blocks and you want to see leverage of this, you're looking for the last point before the inefficiency. Okay, I hope that makes sense.
Yes.
Okay, so that was the last point before the inefficiency. So this here was a grab on liquidity of some sort. And then this was a breaker structure above this internal structural high. This was the last point of inducement inside of the area, right? The first point of inducement, because we are coming from top. If you're coming from the bottom, it's the last point of inducement. Okay, and then price still still with that breaker block and move. So yes, that was a nice confirmation. I think the reason why we also had this is because after this movement, this was a transfer of funds from this guy to this guy, and this guy had now sponsored a new break of structure. So it means that inside of this had to be somewhat of sensitivity. Okay, that now give us rise to this move. Okay, even if it didn't stay too long. Yeah. Another question? Okay, so I think that's all for now. I'll see you guys if need be during New York and or probably during New York or after New York. All right, guys. So have a great day and then have an amazing time on the chat. See you guys later.